Hello, my name is Philip Totaro. I'm the founder and CEO of market research firm IntelStor. Welcome to your weekly dose of truth to power. Truth to Power examines data driven insights for the energy sector with a focus on renewables. On this week's episode, I'll present an update on some of the analysis that IntelStor has completed on asset profitability and the prospects for the operations and maintenance market in the United States. The wind energy market in the USA now has more than 155 gigawatts installed and operational. I've previously shared some of our forecast numbers that we could see up to 30 gigawatts installed in the next few years. I've seen some other projections floating around out there, and I believe they're a little bit too optimistic. They don't actually take into account crane capacity the way that IntelStor does with our forecasts. The USA now has more than 60 gigawatts of assets, which are now 10 years old or older and would normally qualify for a production tax credit requalification. But with the limits on crane availability, many companies who have not already scheduled their asset repowering or refurbishment to try and qualify for PTCs will find it hard to do so by the end of 2027. Now, for those of you who subscribe or if you routinely follow our analysis, you'll know that we try to look at the technical and financial performance around assets. For all the projects which have been repowered in the USA to date, we analyze the lifetime average annual energy production and net capacity factor before the repower and after. The USA has seen an average annual energy production improvement of just under 4%, but it's also noteworthy that some assets which were repowered actually lost performance upwards of 15%. That was due, unfortunately, to teething issues with the new turbines, particularly some of the units which replaced the GE, 1.5 77s and 82 and a halves, as well as some of the GE 1.6 and 1.7 100s with, upgraded power output, rotor size, etc., that didn't take into account the extra wear on the bearings. But some asset owners who are looking to repower will need to improve their technical and financial performance just to get a financial institution to refinance any residual debt or loan them the money to pay for the cost of the repower. I'll get into what that means a little bit more in a minute. Of the 155 gigawatts in the USA, there are just over 14.6 gigawatts of wind energy assets that will not turn a profit during their planned lifetime. We calculated how much time these assets would require from life extension in order to break even or at least get themselves down to a threshold of residual debt that a bank will find acceptable to refinance the remaining debt and provide them with a loan to cover the cost of the repower. Now, with production tax credits in place and the transferability of some of those production tax credits to the financial institutions that are providing the capital loans, they had a threshold of somewhere between 30 million and 50 million in residual value left on a project before the tax and budget bill changed the PTC requalification rules. Banks now seem to be increasing that threshold, which means assets will need to reduce their remaining residual debt down to somewhere between 20 to 25 million on the asset before the bank will refinance the repower. So basically, if you spent, $300 million on developing a 200 megawatt project and you have anything more than about 20 to 25 million left on that project, the bank's not going to give you a loan to go and do your repower and refinance the remaining residual debt if you don't reduce it to that kind of a threshold. If an asset owner can't get to this threshold that they need to be able to repower their asset, those asset owners will need to refurbish and life extend their assets to improve their technical performance and the project economics. So some project portfolios, they can life extend a few years, but as you can see from this example of Iberdrola and Avangrid, a few projects would need 7, 8, or even upwards of 14 years worth of life extension just to get them to a break even. Since the average for the entire industry is well below that, most projects will benefit from some major component refurbishment, even before they attempt to repower. This may end up being beneficial for them if it also helps an asset owner bridge the gap from the end of 2027 to the beginning of 2029 when theoretically the 121st Congress would be sworn in, and there's a hope that that Congress would potentially reinstate the production tax credits and investment tax credits. Now, before I sign off this week, I'll share a couple more tidbits on whether or not we need the PTCs anymore. In the past, we've compared metrics like net capacity factor and energy yield to see if there was any causality or influence. And the reality is, PPA prices and asset profits were also thrown into the mix just to give us a deeper understanding and a better perspective. A high PPA price and a high net capacity factor typically leads to high profitability on a project. High net capacity factor definitely has an impact on the energy yield benchmark as well, independent of the PPA price. But some assets with a high PPA price and poor technical performance can still turn a profit for an owner. While we make a big deal about technical performance and availability, etc., there are a number of projects out there which have fantastic technical performance but a low PPA price, and that's also causing them to see a challenge to achieving a financial break even. In 2018, the average PPA price for both utility power offtake and merchant power projects was around $23 a megawatt hour across the entire wind energy installed base. Last year, the industry has already trended towards more than $40 a megawatt hour, and we're now on track to be more than $60 a megawatt hour by the time the PTC qualification window begins to close on July 4th next year. Now that PPA prices are trending up, partly due to the loss of the production tax credits, this should actually have a beneficial impact on asset profitability overall, which is something we'll continue to track and we'll obviously be happy to share with you here on Truth to Power. Thank you for joining me this week. I'm Philip Totaro, and this has been your weekly dose of Truth to Power. Follow us on IntelStor's YouTube channel as well as your favorite audio platforms. And visit www.intelstore.com to join more than 200,000 subscribers to our renewable energy data solutions. A full analysis of the renewable energy market in the USA and the rest of the world is available to subscribers. And you can register today for the next Wind Summit event in Toronto, Ontario, Canada. Visit www.windsummit.org and join hundreds of your industry colleagues to discuss all the latest trends in operations and maintenance. We hope to see you there.